Hey guys, it's Jaden here. So you've probably heard the quote that over 90% of millionaires become so through owning real estate. Today, we're going to be talking about how you can invest in real estate without having thousands and thousands of dollars, but something as little as just $1. To do this, you'll be investing into what's called a real estate investment trust, also known as a REIT. This is a company that owns and makes money through real estate. So we'll be going through what REITs are, the pros and cons of investing in them, investing in REITs versus actual properties, and at the end of the video, we'll be going through some of my favorite REITs and a step-by-step guide on how you can invest in them. But before we go on, we do have a commercial real estate deal highlight from our sponsors today, myself. So this retail center was a previous listing I had in LA County. It was fully occupied with 3 tenants, including a corporate guaranteed ACE cash. With multiple offers, it ended up selling for $3.17 million, getting very close to asking price. Believe it or not, real estate is moving despite the pandemic. If you are an investor looking to buy or sell your property, or you just have any other questions, feel free to sign up for a free consultation below. And regardless of who you work with, make sure to work alongside a team of professionals while navigating through these crazy times. Back to REITs now. So REITs were created back in the 1960s to enable people like you and me to invest in large-scale income-producing properties. REITs use our investments as capital to further invest in more properties and grow. And as a reward for investing in them, REITs pay its investors a dividend. This is consistently paid every quarter or sometimes even monthly. Many investors invest in REITs for these dividends. And because REITs are required to pay 90% of its taxable income, REITs have higher dividends than most other companies. And there is a REIT for pretty much any type of real estate, from multifamily, office, retail, industrial, self-storage, and the list goes on and on. Now let's go through some of the benefits of investing in REITs. So number 1, REITs do not require a lump sum of money to invest in them. When you buy physical real estate like a house, you need a down payment to fund the purchase. But this down payment may take months or even years to save up for. But with REITs, since you can buy a fractional share with just as little as $1, you can start investing in them right now. And moving on to the second benefit. You do not need to clean a single toilet, have any showings, or go through any lease negotiations. There is no management needed to be done. In fact, all of the management and investment decisions are made by a team of experts that lead the company. And these executives are also invested into the company as well, so their priorities are aligned with yours. So the only real work you need to do is the initial due diligence and research into the company before you invest in them. After that, you just collect dividends for passive income. And number 3, REITs are very diversified. And this is because you're not buying into property A or property B, you're actually buying into a company that owns all of those properties. You wouldn't be able to do this when you invest into a single property by yourself. And number 4, REITs pay high dividends. I know I mentioned this before, but a common investment strategy done by many investors is to use that dividend to buy more shares of that company. Historically, investors that have done this have gotten returns that are higher than the returns from the S&P 500. And number 5, the final benefit is that REITs are very liquid. And what that means is you can buy or sell REITs very easily. If you need some extra cash for whatever reason, you can sell some shares and get paid immediately at the market value. This will not at all be possible with physical real estate, as it takes months or even years to sell. And of course, with every benefit, there's also a negative, so let's go through some of the downsides of investing in REITs. Number 1, dividends from REITs are not considered to be qualified dividends, so you'll be paying income taxes on them instead of capital gains taxes. And depending on how much income you make, it could be a small or big difference. And my guess is that because REITs are required to pay no corporation taxes at all, this is the government's way of making REITs pay their fair share. But starting 2017, dividends from REITs do qualify for the QBI deduction, so 20% of all dividends you received are tax-free. So let's say you made $100 in dividends this year, you only pay taxes on $80. And number 2, dividends are not guaranteed. When you invest in a REIT, you're not signing a contract that says you'll get paid this dividend for this many years. So at any given time, REITs can cut or suspend their dividend. Now, this doesn't mean that REITs are out there just to scheme and steal your money, but there are actually many REITs that have paid and consistently raised their dividend for multiple decades. So this is just more of a reason for you to do your research before you invest in anything. And number 3, you cannot leverage your REIT investments just like you would physical investment properties. And what this means for most investors is that your returns will be lower. But on the bright side, because REITs are very big companies that are managed very professionally, they do have access to very good, cheap debt, which you indirectly benefit from. And number 4, the prices of REITs are very reactive to market conditions and sometimes emotions. Right now, when we look at the market, REITs were down 30 to 40% in a matter of just a couple months. This was mainly due to the uncertainty around commercial real estate during the pandemic. But throughout the same time, actual real estate investment properties have remained very stable or even gone up. But when it comes down to investing in REITs versus investment properties, I would say the winner is investment properties. And this is primarily because of the returns you can get. Since both are investments, your ultimate goal is to get a return on your money. And there's no denying that you can get a higher return when you buy physical real estate because you can leverage your money to buy a bigger asset. But obviously, this does come with a lot more work, time, and knowledge, which is not always ideal. In some situations, it might be better for you to invest in REITs and let the professionals do their thing. In the end, I think it's a good idea to invest in real estate, whether it's an investment property or your house, and use some remaining money to invest in REITs on the side. Now that you guys know a little bit more about REITs, here are some of my favorite REITs, but make sure you do your own research before investing. And currently, I think REITs are definitely worth looking into because there is so much fear and negativity around them. Personally, I think real estate will come back stronger after a vaccine is created and distributed, although there will be changes to how real estate is used. And for those of you guys who have never bought a REIT or a stock before, here's a quick guide on how you can do it using M1 Finance. So first, you can go to my description box in any video to get my referral link for a free $10. You then sign up by filling in some very basic info. And then you can log into your account to look for any company to add to your pie. And let's say you want to add American Tower, then you can select it on your page and enter how much you want to invest into the company. And then you are set. Well, that's it for today's video. Hope it was helpful. And if it was, please do share it with a friend. And I'll see you guys in the next video.